The broadcast is now starting. All attendees are in listen-only mode.
A very good afternoon to everyone. Welcome to today's webinar, Pre-Audit Engagement Checklist by Manoj Abhichandani. I can see a lot of people still signing in to the webinar, so I would request everyone who's already signed in to patiently wait while we have others join in. We will begin the webinar in the next 2 to 3 minutes. Thank you for your patience. All right, I think we've got quite a few people in. Okay, just another minute. I think there are some more people joining in. Great, I think we have majority of the participants in. Now, before we begin or go any further, can someone from the audience please confirm if they can hear me all right? You can do so by just typing a simple yes in the questions section on your panel. Anyone from the audience, if you can just give me a simple yes, I will know that you can hear me properly. Perfect. Thank you very much. I've got my confirmation. Now, a few housekeeping rules before we go forward. A copy of this presentation can be downloaded from your panel in the Handouts section. If for any reason you get dropped out of the webinar, please look at the screen, note down the number at the access code and the audio pin. You can dial this number from your mobile device, put in the access code and the audio pin, and rejoin the webinar from your mobile device. If you have any questions, please type them in the questions section. We will address them at the end of the webinar, provided we have some time. Now let me introduce the speaker today. It's Manoj Abhichandani. He is the SMSF product manager for Deed.com. He has worked in the SMSF space since 1988 and seen changes from the earlier days to a $1 trillion retirement pool. Initially, he worked as an accountant for 7 years for 2 CA firms in Sydney in the SMSF division, and then his own CPA firm for 19 years as an advisor to 600 SMSFs on strategic issues. He has written and regularly updates online smsfaudit.com.au, an online audit tool which is used by over 600 auditors to audit more than 80,000 funds each year. He is responsible for all SMSF products at www.trustdeed.com.au, whose SMSF deeds are used by more than 10% of all SMSFs. Welcome, Manoj. The stage is all yours.
Thank you, Vaibhav. And before I start off, I would like Vaibhav also to participate in a way, because if you are an auditor and you have been using online SMSF audit, that there would be a lot of queries coming from auditors, and in between I will be talking to Vaibhav to say that on how these auditors have an issue as far as pre-engagement audit is concerned, and where it is placed, and how you can use the software online SMSF audit to ensure that you comply to these requirements of ASA 300 and 210, which we will talk about very shortly. Now, just as an introduction, and sometimes we want to jump into the audit before we do a few things. So I'm going to talk about all of those things which you have to do, and what are those procedures which you have to follow. What is that checklist? What are those things which you must always do before you jump into the audit? And many instances, these steps are actually missed, and a lot of auditors, when they get checked by the tax office, their audit team, whether you have completed an assignment and engagement properly, the first thing they come and ask you is, where's your pre-audit procedures? And a lot of us are not even aware of what the tax office are talking about. And perhaps by this presentation, they will understand that they must also follow these procedures before they commence their audit working file. So that's what we are going to talk about here. Now, just as an introduction and an overview of these audit procedures, the checklist, there's basically you have to prove to your working papers file that you have accepted the engagement in a proper and orderly manner, and you have followed a certain procedure in following that manner, and in accepting the engagement. What I'm going to talk about in detail, but what I'm talking about is whether you have spoken to the trustee or the party who has engaged you, whether you have issued your engagement letter or not, whether you have assessed the fund, and whether you have judged your internal procedures, whether you are able to audit that fund or not. Because, for example, the fund could even have cryptocurrencies, whether your audit team, you yourself as the audit partner and the audit team, do you have the capacity and the technology to accept, let's say, if the fund has done some option trading, do you have experience? Do you have the ethical requirements, whether you are professionally qualified and trained to do those jobs or not? And also whether you are independent or not. And now I'm repeating myself, and in these series of webinars, I've said this many a times, that it is not that you tell the tax office when they come knocking on your door that you have done it. You should be able to prove it that you have done it, and the only way to prove it is you have to document it in your working papers file. And this is where I have seen that the auditors are lacking. Although they follow the procedure, but they are not able to prove that they have followed the procedure. And the only way you can prove that you have followed the procedure is that you must have all of these items which I'm going to talk about in your working papers file. Now, let's just talk about the auditing standard ASA 300, and it talks about planning an audit of a financial report. It could be a listed company or for any other purpose. And as a superfund auditor, you are supposed to follow all the auditing standards, so including 3SA, ASA 300, and it talks about what procedures you need to follow and what client relationship you need to maintain in any specific audit engagement. You must comply with the ethical requirements, and you must also comply with the independent checks for each and every audit. And it's not only each and every audit. For any continuous acceptance, that means that whether this is your first year audit or you're auditing the fund again, you have to do it each and every year. You have to document each and every year that your audit team is ethically suitable for the engagement, and it is independent for each and every engagement, and you have understood the terms of your engagement. Now, most of these things would already be in your engagement letter, but then they have to be documented specifically that the audit team has these ethical requirements, and the independent check has been made for each and every member of the audit team. Now, as far as planning the audit is concerned, the ASA 300 talks about selection of the audit team, and you have to think about any risks you have in selecting your audit team. And some of you may be sole practitioners, so it could be irrelevant for you. But now I have seen that the audit firms are getting consolidated, and there are lots of staff working, and there could be a audit principal or a partner, and there could be other SMSF, ASIC approved SMSF auditors working for that audit firm. Now, there has to be a review process, so there should be proper supervision. So if you are the partner or if you are the firm owner, if you are engaging some staff members, or if you are engaging some ASIC approved SMSF auditors, their work has to be reviewed before you issue the audit report. So that is the procedure, that is the planning work which you have to maintain. And also, if you're going to use some experts, like you could be using an actuary or a valuation firm, and you have to see on how you're going to coordinate your work with the experts which you are going to engage. Now, the job is very simple. You have to perform an effective audit, and that means that the involvement of the key members of the engagement team should be familiar with the environment of the audit, and you should accept the engagement in such a manner where you are capable to perform those duties. And you have to be, like I mentioned, you have to evaluate your ethical requirements for each and every engagement. You must understand the terms of your engagement. So if the trustee is giving you an engagement letter, or he's signing off your engagement letter, and he's giving you a trustee representation letter, you must have the full understanding of what is written in the trustee representation letter. Now, I know in practice, many a times the trustees or the accounting firm does not have a trustee representation letter, and this trustee representation letter is issued by the auditor to the trustee, which in fact, theoretically, it is incorrect. It is the trustee who should draft out that letter and instruct you or engage you in that specific manner. And they require in every trustee a representation letter that you to be independent, and they clear out that independence cloud in that trustee representation letter. But at the time of the planning of the activities, now you may think that it is a small fund, 2-3 hours does the job, but the timing should be very proper, because there could be certain deadlines, there could be certain lodgement dates, and you may have requested some further information from the trustee. So you have to ensure, and there is legislation in place, that you get all that information in that due time which you have allowed the trustees to. Now, as an auditor, you must use your professional judgment, and we will talk about what is professional judgment, and every team member must put all the efforts. Now, before you take on any engagement, you have to self-assess your firm, whether you have the required time to conduct that audit, whether you have the right technology and you have the knowledge to use that technology, to conduct that audit. Now, documentation is the key, and any audit strategy you build or an audit plan you must build. You can't say that I have audited this fund and I have planned this audit and I have a checklist. So what you need to do is you have to document that checklist, you have to document that audit plan, and you must send out an ethical letter if you are going to audit that fund for the first time in your for that fund. Now, if you are auditing a large number of funds, if you were the auditor in the previous year, then you must also look at the management letter and see if there are any significant matters which were highlighted last year, whether they have been cleared out in the current year or not. So you have to familiarize yourself with any major issues which the fund had in the previous year. So let's look at step number one, which is the acceptance of the engagement. Now, you must consider all of the below before you accept the audit assignment. And I have seen many times the auditor will sign the engagement letter before the trustees sign them, and that could be a problem as well. So you should always get them to sign the engagement letter before you accept any audit assignment. Now, this is not only for accepting a new assignment, but it is also a continuing audit. So every year you must issue audit engagement letter so that the trustee is aware of what is the environment you are working on. Now, in the trustee engagement letter, there should be a reason why you are being appointed, and the reason is the requirement of legislation that a super fund should be audited before lodging a tax return, and any financial breaches or compliance breaches should be reported. That is your responsibility as an auditor to identify those breaches and inform to the tax office. So that is the reason for your being appointed. The second thing is that before you accept the engagement, you should be familiar, and you have to make sure that the ethical letter has been sent and you have received a response. Now, commencing an audit before receiving an ethical letter is not okay as far as the auditing standard is concerned, and many a times you would be receiving these letters from auditors who you are not auditing the funds this year. So you must, as an auditor, respond to those ethical letters. And if you don't, that means that you are not acting in a professional manner. And if any auditor does not respond to you, you have every right to complain against him to his professional body so that he is correctly, he changes or amends his methods of operation. You are also free to call him, phone call, and say that, look, I wrote you an ethical letter. I have not received a response yet. Could you kindly respond to me or tell me now over the phone? And then again, you must document your phone call to the previous auditor and get the matters all sorted out. If you get an ethical letter back, your response to the ethical letter, the auditor will also, should give you the management letter he issued to the trustees in the previous year, and then you should go through those matters in that ethical response to that ethical letter and make sure that you have a record of these, and you have to put proper attention to those matters when they appear in your audit of the current year. Now, you must also judge the trustees' internal control methods, and usually the trustee representation letter would declare that they have kept good records and they have some method of internal control. That should be quite satisfactory because they're declaring that item to you in your audit. But again, it should be documented. Now, if a trustee representation letter is drafted incorrectly, if you are an auditor, you are in your right to contact the trustees and ask them to amend their trustee representation letter, or you can ask them to give you a separate declaration on internal control and proper record keeping of their financial statements. Now, if there is intermediary involved, like an accountant who's referring the work to you, then you have to ask them to ensure that they include these items in the trustee representation letter. Now, uh, many a times original documents are not provided to you in the format which you like. Sometimes only PDF documents are available. They can be appropriate provided the trustee guarantees or declares to you that they are the true reflection and they have not been copied and they have not been doctored with, and they are the original documents of that particular fund. So this is something which you need to clarify with the trustees of the fund. Now, the next point is very important. That is the ability for the client to pay the audit fees. On this, I have spoken to many auditors, and many have told me that they want their fees to be paid in advance before they commence the audit. It is dependent on your relationship with your clients. And I guess asking for fee in advance is quite normal, or you could even ask 50% fee in advance. And as far as I'm concerned, I audit very few funds. The way I do it is that I'll send my engagement letter and I will ask them for a trial balance to be sent back to me. Once I get a trial balance, I can assess the amount of work involved in that fund, and then I get my fee letter out with my invoice. They have to accept my fee, and by accepting, they have to sign it and pay me a 50% deposit before I can commence my work. Now, if in the trial balance I can identify any risks, in my letter I ensure that I alert them of those risks and my tolerance of what level of documents I would require. So if there is a 70-year-old member who is on pension, I will make sure that I will ask them whether or not that person is of sound mind. So I would want that declaration to be in there. He doesn't have dementia and he's made all the decisions, purchase and sales decisions. So those are the things which I will want, which is over and above a normal audit, so that I can identify and I can mention to the trustees and I get them in front. I also will not accept an assignment if I don't have the capacity, and if there is a deadline, I would like to know that first, because many a times there are trustees who want to commence pensions. So you will get a set of accounts sometime in July or August, and they want to do this very quickly because they want to commence a pension on 1st of July. They want to withdraw money from the fund as an income stream. So you need to get that clarified from the start, like before you even commence the audit. Now, in my team, I have staff who is overseas, so I let them know that they have the necessary skills and competency to complete the audit. So I want to make them aware that this is what will happen, and they have to be comfortable with that. Now, if any of those items are not, if I see some loan withdrawals or some monies coming out of the fund, I make sure that I tell them that I will be lodging contravention report, and I will be alerting them of all of these complications which can happen. So before I start the audit, this is all happening. I haven't even commenced my audit. All of this would be happening all beforehand. Now, as far as compliance with the ethical requirements are concerned, I have to, make sure that I have and document it, that I have the capability to do that audit, to perform according to the auditing standards and the pronouncements and according to the legislation, according to the SIS Act. I will be my objective would be is to issue the audit report, and I will be confidential in their information, and I will also behave in a very professional manner according to my professional body's requirements. Now, just saying it that I will do it is separate, but my working file should say that I will follow the professional ethic and the standards by APS 110 as well. So the next thing is, what are these requirements I have to follow? I have to make sure that I have professional education and training. And this is for all my staff members who are overseas, and they have to follow a certain procedure, an audit plan, which I will prepare, and the fund will be audited ethically. Now, all my staff has knowledge of superannuation legislation, so I will document that they will be, these are the individuals who will be performing the audit, and these are their knowledge, these are their qualification, and they have so much of experience, and they have the training necessary to exercise the professional judgment while we are conducting the audit. Now, I always tell my staff that if you have any doubt in your mind, unless until you are 101% confident of what you see is what you believe, you must always have a questioning mind. You must always check whether there is an item in the financial statement, whether or not it is fully covered by the audit evidence which is in front of you. And if it is not, then you must query it. And those accountants who are listening to me, if the auditor wants to, get some more information, please provide it to them, because they have to issue an audit report, and you need that audit report to get to the next step of lodging the tax return for that fund. Now, what is the procedure, how to ensure that you are ethically, you have met? So first of all, you have to document, that you have accepted the audit, which is after conducting all the searches, checking all of that, whether you are ready to take on that job or not, and whether your team is okay to do the job, whether they are independent or not, and if there is any matter which is contentious, or if there is anything in doubt, you have to sort it out with your engagement team. So we had a new staff member, they were not aware of LRBA, so we had to give them a fund. So first we conducted the training of the staff member, and then we held the person's hand so that the staff member became very, very confident on what are the items to look at. So you must sort out not only internally, but with also the trustees. And whatever the conclusions the staff member makes, you have to review those conclusions. So let's say there is an audit evidence that there is interest paid to the bank, and there is a bank statement. So you have to make the conclusion in your audit checklist that I have checked the interest expense for the LRBA, and I'm confident that it is correct. It is many a times, even I have seen this happening myself in my own fund, where the bank had actually calculated incorrect interest. So we had to get it corrected by the bank. So it's not only looking at a document that which has been produced to you by the trustee, it is also validating those audit evidences to check whether they are correct or not with your own calculations and with your own assessment of that audit evidence. Now, once you have an engagement team, or if you are the only member of the engagement team, you should document uh, each and every conclusion. Now, believe you me, every time you audit, you have to write down a yes and a no is not okay. So let's say in your audit plan, you have a checklist. Is the bank balance okay? Is the bank balance as per the bank statement? So you can't say yes, that's not enough. You have to say that I have checked the bank statement, and in the bank statement, we have $18,511.36, and in the financial statement, it is the same figure. So a word yes is not enough. You need to document it, and that is your agreed conclusion, because that is what is happening in your mind. It is not that is the bank statement balance as per financial statement. Yes, that is not the answer. You have to document the whole thing, and that is what the tax office is looking at. Now, supervision of staff, that becomes now a law according to the auditing statement and the quality control of your audit firm. You must follow the ASQ1, ASQM1, and if you don't know what that is, there is a recording available in SMSF school. You can go through what are the major elements, and you must have an audit plan, and must have a audit control plan and a quality control plan for your audit firm. Or I have provided a sample quality control plan for you for your audit firm. So if the ATO comes to you, they'll ask you what is your quality control. Now the same thing is also happening for tax agents, and you will it's a bit in the limelight at the moment, and all the professional bodies are asking the tax agent board and the tax office to be a little bit lenient and provide some time so that each and every accounting firm can implement that quality control plan. So it is coming, and all that is coming because I don't know whether you are aware. I think it was the Price Waterhouse. Sorry, I don't want to defame anybody, but I think they leaked some information of the tax office. So they are very, very aware that each audit firm, each accounting firm should be using certain measures to judge on how they run their businesses. So this quality control and this quality control plan will become a very important part of your audit when the tax office knocks on your door. Now, all conclusion reached. Once you look at the audit evidence, they should be supported by audit evidence. So the bank statement, a PDF of the last file, you can stamp the bank statement so that it is certified that is the one which you saw at the time of the audit. And obviously all the fund audit should be done in a timely manner. I think there's a requirement of 45 days, which you must check on. Now, as far as the independence assessment is concerned, this is very important, and again, it must be documented. So it's not only applicable for the auditor, but all of the staff members. They should be all independent at mind, and they should, when they're putting an opinion on certain figures in the financial statements, they should be doing it without any influence or any compromising situations in their professional judgment. Now, usually the way we do it, if there are any issues, the staff member raises it with the senior, and the senior will raise it with me. So if it can be sorted out between the two of them, it can then just finish off there. When it comes to me as the audit partner, I will make sure that I will talk not only to the supervisor, but I will also talk to the staff member who had identified a certain breach, and make sure that I get their opinion as well, because the objective of my audit is to ensure that the fund remains as a complying fund. And if I'm giving an opinion that if it complies, I must ensure that all loose ends are tied up. And the reason for that is because I will have a professional, skepticism on each and every transaction of the fund, and I must have an open mind to report each and everything to the tax office, which I, in my opinion, feel are not according to legislation or not according to the auditing standards. Now, what are the steps involved of independence? It's very simple. I have to identify any threat, which could be of any significance, and then I have to see how I'll eliminate that threat. And sometimes to eliminate that threat, I need more audit evidence. And if it is significant, then obviously I would be assessing that separately. But I have to also show that I am not preparing the financial statements of that fund which I'm auditing, because then I would breach the self-interest threat, or there could be a self-review threat. If I have any conflict, in the fund getting lodged without any qualifications. Now, there could be, auditor could be promoting a client's position or an opinion, let's say, as far as valuation is concerned. So the auditor must, let's say, he wants to commence a pension with 1.9 million, and he gets a valuation of the asset, which could be a property. So you have to be very, very clear that the trustee is not putting any pressure on you to ensure that the pension is of the maximum amount of 1.9 million. It's possible that the asset value could be more. So you have to use objectivity and assess whether there is any risk, or whether the financial statements have been compromised or in any manner. Now, the auditor should not be sympathetic towards the trustee's interest. Your objective as an auditor is to look at the financial statements, look at the independence of the expert, the valuer, and ensure that there is no such threat of independence. Now, many a times you get intimidated by the middleman, the accountant who is involved in engaging you, and there could be a replacement by a new auditor, or the fee structure, or all of those things. And I think we need an hour specifically to try and talk about the independence risk, on who can give you an audit, whether it is a network firm, or if you are a part of a large accounting firm, whether or not you can audit the funds of another branch, and also whether you are rotating the auditors, in the sense that you are the accountant and your auditor is auditing your funds, and you are auditing his funds. So you have to be very, very clear that all those threats of independence are not influencing your mind in completing an audit. Now, what happens and what action you must do to eliminate a threat? So if you are a rotating auditor, where your audits are being done, the funds which you do the accounting for, by a familiar person, by someone you are doing the accounting for, you should try to eliminate the threat. If there is another partner in the firm who is not responsible, you should possibly use them. But if there is clear significance, or if there is a threat which is identified, or if you have prepared the accounts for any manner, or if any one of your team members says that, my uncle's super fund needs to be audited, can I do the audit? So all of those things have to be tested for each fund for every year. So and it's in the quality management statement, which you have to put, that each trustee has to give you a sign off for each and every audit. Each member of your audit team has to give you that declaration that I'm not related to any of the trustees of the fund. Now, if there is a significant client, so there may be a group of companies your accounting firm is looking for after, and then he's quite a major client of the firm. So let's say 10% of the revenue plus comes from this client, which could be quite significant. So you have to be careful whether you can audit that in your network firm as well or not. So that could create a bit of an issue as far as independence is concerned. Now, if you cannot put these safeguards, like use some other auditor or use a specialist auditor or outsource that work, you could continue to do it, but you could bring in a specialist auditor to look into that one fund, because he could be a significant client of the firm, and because there is an independence issue, you by putting a safeguard that is bringing an expert in could probably solve the problem. But if it cannot be solved, then obviously there are certain problems that you cannot eliminate those threats, or you cannot reduce them to an acceptable level. The APS 110 recommends that you should withdraw and you should decline from that engagement. Now, these things should be done annually, and if there are no threats to independence, or there are no identified threats, then your life is very, very simple. Then you can continue with the audit, and you can sign off that engagement letter, and then you can commence an audit. So, Vaibhav, I think I have covered most of the items here. And as far as the audit is concerned, I think it's tab A, which covers most of these items, where each and every team member of the audit firm has to measure up to these independence threat, and pronounce that they are ethically competent and professionally competent to do the audit. Would you like to contribute something on tab A with your experiences of the auditors who are using the software?
Absolutely, Manoj. So whatever you've mentioned in your presentation, we've covered everything in tab A of the online SMSF audit software. Now, there is pre-filled text, which will cover all the compliance issues that an SMSF auditor needs to have in his audit working papers. The most
Mhm.
common issue we see when auditors are using the software is that they don't read it. You know how it is that
Mhm.
there's a lot of text on the software, but nobody goes through what is written. So tomorrow, if the authority comes to you and asks you what you've done in terms of taking precautions, they don't know much because they haven't read what is already written in the part A of your working papers. So it's very important for every
Mhm.
auditor to read and also amend as per the audit, as per the fund
Yeah,
requirements, because
yeah, that's true, because yeah,
every
we
scope.
have provided a template. Yeah, we have
Correct.
provided a template.
Yeah.
So part A should be amended, or should be added, or deleted, or whatever. The content should not be the same for each and every fund.
Yes, because that's also a risk. Tomorrow, if they pick up 10 funds of yours and they see that every fund's scope is the same, there is a problem.
Yeah,
No fund
yeah,
is
yeah.
the same. So the client profiling has to be changed. Independence
Mm-hmm.
assessment, yes, maybe that can be similar because obviously you're not preparing the financials and also doing the audit. So that is fine. But
Mm-hmm.
the scope of the audit, the client profiling, risk analysis, materiality assessment, all of these things need to be fund specific. So auditors need to
Yes.
understand that this is a very important part of the audit, especially when you're just accepting an engagement. If it's a new client coming
Yes.
on board, these things are very important to consider. And it's not like you're safeguarding the client, you're also safeguarding your license, you're also safeguarding your own business, because when
Yeah.
ATO comes to you or CPA comes to you, they will see what you have done in order to,
Mm.
accept the
And
engagement.
I can understand why they don't do it, because they get 300, $400, so
Exactly.
and that's where the problem is. And each and every event of mine, each and every time I come here on this platform, I talk about it, that the fees which you are charging may not allow you to do a good job or a proper job. And if it's not allowing you to do a proper job, then obviously you have to increase your fees. And if you increase your fees, there is always someone else who can do it at a cheaper price. But then it's up to you, because all of those cheaper prices are getting weeded out by the tax office. So if you want your license to stay, if you want to do audits after 2 or 3 years, because the tax office this year has said that they are going to go to the second tier and the third tier auditors. They have already finished their work with the top 100 auditors who audit more than 300 funds. So now they are going to follow through with the auditors who audit less than 300 funds, and they're going to make sure that their audit procedures are correct. So we have the tool. It's a matter of you using it correctly. Is that correct?
Absolutely. And is like you
Mhm.
said, the price right now, in my opinion, right now the game is all about quantity and not quality, because everybody is rushing to just get as much as business as they can, but they're compromising on the
Mhm.
quality. In a couple of years,
Yeah.
that quantity is not going to matter because the authorities are going to take away half your funds or your license in a whole. So right now, it's
Yes.
better to concentrate on quality and the prices. Like you said, everybody's there are auditors, which I don't know if the audience will believe, but there are auditors outside doing audits for $100, or they're doing it for 50,
Right.
$150. So it's very difficult to compete with that price, and especially when you're putting in a lot of hours into a fund, it just doesn't seem right.
Mm.
But this will change soon in the
Yeah.
next couple of years, and that's what ATO and ASIC are working towards, to streamline the entire process of audit so that the auditors are not
Yes.
underpaid and the funds are not
Mm.
compromised. So in a couple of years, you'll
Mm.
see a big change where the auditors will be able to see a $700 to an $800 average price per audit.
And one more thing, the number of funds out there. I mean, in trust deed, we are experiencing a huge number of new funds being set up, and there are not many funds which are closing down. I
Correct.
think our average is about 10 a day or something like that. So
Easy.
there, I mean, that's only us as trust deed. So if we are doing 50 in a week,
Mhm.
so new funds, which in a year is about 3,000 funds, about five, every year there are about 25,000 new funds coming up, and we are creating maybe 3 4,000 of those 25,000 funds.
Yes.
That's a big number. So every year, so the auditor should know that the future is going to be really big. So if you're going to do an audit at a low price, I'm sure there is a fund out there which will pay you your price to do a good job.
Correct.
So this is what I want to reiterate as well. Um, if you want to continue doing your work after 5 years or 3 years, then you have to do a proper job. And if you don't, and I have a little bit of advantageous position here, because when my license was taken away, I sued ASIC back in the tribunal, and then I could show to them that there was no wrongdoing done, and ATO is ready to shoot out, and they want to get rid, and they want to and I think every 2 or 3 months we get news from ASIC that so many auditors are being disqualified and all that stuff. So they want to show that and announce it big. And the media is also on their side to say that, and they keep repeating that story that so many auditors got disqualified. And the other day, I was reading that news, and it came back into light that there were about 16,000 funds which had property at the same value for 3 years. So the tax office not only cautioned those funds, but they also wrote to 1,000 odd auditors who were involved in auditing those funds, that how can you allow the property to be the same value over 3 years period. So those 1,000 auditors will be gone. And
Exactly.
once those auditors are gone, I guess fees would be anyhow. That's enough on that issue. We still have some time. Is it possible to get some questions, or do you have any questions for me to answer, or
Yes, Manoj, I have a
we
couple.
can
So
wrap it up?
no, we
Yeah,
have a
yeah.
couple of questions. We'll try to make it quick. So they are asking
Yeah.
that you mentioned about outsourcing staff. Who do you use?
Okay. We have a team in India. The team is 16 people, so they don't not only audit for me, but there are other auditors who use our team. We do close to 7,000, 8,000 audits or something like that by these
Yes.
16 people. So
Yes.
what they do is, if you are an auditor, you can hire them per fund basis, and we charge. This year we are increasing it by $10. We charge $110 plus GST for the funds audit, and they will do almost 90 to 95% of the audit. The things which I was talking about, you have to document it, you have to write part A, you have to do all of those things. So we have those 16 people. um, uh, Four people are seniors, and they have two people each working under them. So the team is divided, like we have four people. Sorry, we have two people, one supervisor, two people, one supervisor. So there are eight staff members, and minimum qualification of those people is bachelor's degree in India, obviously, and their senior staff, the managers, and then obviously we have someone who is 17th person who runs the whole show. And the person who runs the whole show is an Australian citizen, and he has now migrated back to India, and he's running this whole team for us. So he has four seniors and eight, what do you call, eight or more, I think it's altogether there are 16 and him. So he does all the training, he's in touch with us, and he looks after the whole team members there. It's a very secured office, and very soon we will be have a ISO 27001 stamp on this whole operation, so you will get privacy would not be a problem at all. In any case, all the funds get audited online, and the software is on AWS in Australia. I don't know where, because AWS won't tell you. So that's how we do the audit.
Okay. The next question we have is, I remember reading before, but not sure if it still applies, that if the asset of the fund has a certain amount, example, only 10,000, the SMSF auditor can also prepare the financials.
I have not heard of that.
Yeah, I don't think
I
that is true either.
Yeah, I look. The tax office about 2 years back was very, very active on this independence issue, on who can audit network firms and all of that. And then the last I heard of it was that not more than 30%, significantly influenced, so not more than 30% can come from one referral source. So uh, then I think the tax office, I think the commissioner changed, someone in the SMSF department changed, and the new person hasn't taken it up. So, the APS, I need to brush myself as well. I need to get myself up to date on what is happening to that. Cross referrals are not allowed anymore. Like, I audit your funds and you audit my funds, so that's totally stopped. You cannot audit at all internally. In fact, I can guarantee you that that $10,000 is rubbish, because recently an auditor was audited by the tax office, and there was a relatives fund where he had prepared the accounts and audited it as well. So he was in trouble. I would not say he or she was in trouble. So definitely you can't audit where you have prepared accounts with even $1 in there.
Correct. You can just read section paragraph 46 of the GS 009 and also regulation 520.4 for this, because there is no unless any financial interest is immaterial and the business relationship is insignificant, any kind of
Yeah.
audit is not allowed whether you're preparing the accounts for that particular.
Look, Yeah, in preparing today's webinar, I looked at GS 009 as well regarding the independence issues. So you could possibly, highlight that matter. Um, Look, there are so many. I mean, the world is so crazy. There's so many auditors who haven't even heard of GS 009, and if they have heard of it, not they haven't even read it. They haven't read the updated version. So I don't know how auditors live their life, but they certainly live on an edge because these auditors never like passed an exam when they could become an auditor. They applied to become an auditor and they're auditing funds.
Correct.
The sad part, and I'm going to just go back into my slides, and I talked about competent and they're aware of the professional standards. Just give me one moment, and here we go. Ethical requirements, sound and current knowledge of superannuation legislation. And it's very sad, including CIS Act and CIS regulation, relevant taxation laws, rulings and determinations. I mean, they're not even aware of what the act is. If you're not, please don't audit. Don't, because you will be shamed publicly. And that could, and if you are not a fit and proper auditor, they can even take away your tax agent license, because then you could be not a fit and proper tax agent, to be a tax agent. So just 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 if you can't do it, if you think it's beyond you, it's ethically not right, don't do it. That's my personal opinion as well. So if you're not professionally educated, you don't have the training, although you may be an auditor, but you don't know what you're doing, so and I know a lot of auditors because they're using our software, and some auditors just ring me and say that, look, this is the issue, and the issue is so simple, but they don't know. So if they don't know, why they're passing judgment on them, why you're forming an opinion on something what you don't know. So just be very watchful. That's what I would say.
And I would also recommend watching webinars on SMSF School so that you can just learn more about what's going on in the industry as of today.
Oh yeah.
You're probably, like you
Look,
said, they got the
yeah,
license before giving an exam and even studying for it.
yeah,
But it's good if they can
yeah.
just understand what is the current scenario of the SMSF industries and how audit is done today.
Yeah, not only done, but you should be aware of the CIS legislation. The other day, Mark did a fantastic presentation on what's happened in the quarter,
Correct. Yeah.
and that webinar is available. Garth came up and he talked about transition to retirement pension. And, some people, I mean, I got an auditor to ask me that I'm auditing this fund and there is a TRIS of 2.4 million. You can't have a TRIS for 2.4 million. That's what he was saying. I said, why not? He said, you can't have a pension more than 1.9 million. I said, but this is a TRIS. TRIS can be of any amount.
Transition. Yeah. the,
He did not know.
the difference.
So, and he wanted to lodge a contravention because that transition to retirement pension was for 2.4 million some dollars. I said, that's fine. There's nothing wrong with it because you can have a tris of any amount.
Wow.
So there is a big gap, big gap. And the sad part is that these people are not training themselves up. They're not
Exactly.
gearing themselves up. So if you don't want to gear yourself, if you're lazy, if you don't know the law, why are you in this game? Get out.
And putting the trustees in trouble because the trustees also are they also don't have that much of information and they're relying on you, the accountant and the auditor.
Look,
The two pillars.
look, yeah, look. Um, if I mean, this person would have made a fool of himself by lodging a contravention. Luckily, he spoke to me. But had he lodged a contravention, the tax office would have looked at this contravention and laughed at him and come and checked his work and got rid of him.
Yeah.
So yeah,
That's
and
what I'm saying. In the next 2 years, this is what is going to
if
happen.
you Yeah, and if you don't know the law, maybe there's some naughty things which the trustee is doing. You will not be able to identify it, and if you're not able to identify that risk, you have given a green tick to something which was alarmingly red.
Hmm.
That's also wrong.
Correct. But we can only hope that it gets better with the years.
Yeah. Look, I'm pro SMSF. I accumulated everything in SMSF because I thought I'm going to have a pension with all my money, and then 1.6 million came in, and now 3 million is coming in. So I
Yeah.
have to sell everything and take it all out. But I've been in practice, and I followed whatever I said, and all my 600 clients, ex-clients, still ring me sometimes for what I think about what their transactions they are about to do. So. Um, they're all my friends, that's how
Hmm.
life goes on, but at the end of the day, it's becoming interesting for only those people who have less than 3 million,
Yeah.
but for others, they'll
More
be
of a
looking at
pain.
other options. And I'm waiting for legislation to get through, and there will be lots of events on that. And I want to talk about pensions. I will be adding another webinar on pensions. And I would say in the question box, if you are listening to me, if there are any topics you want me to especially, talk about, I'm happy to do so. Because the difference between me and many of the other speakers are that they are like Aaron Dunn and all those guys. They're not accountants, they just talk theory. And sometimes when you talk theory, or some solicitor will talk theory, they haven't done the accounting. They've never seen a trustee as such. They haven't dealt with trustees. For 19 years, I was dealing with trustees. So I speak the language which the accountants can understand. So there's a difference. So I'm not all theory. I give the practical side of which accountants need. So if there's any area which you want me to talk about, just put it in the question box, and in due course of time, I will present on them.
Perfect. I think that's about it, Manoj, for the questions. I think we can now
Yep.
end the webinar for everyone. So I would like to thank you for your time and thank the audience for theirs. We hope to see you in the next webinar. We have a lot of them coming up in the next couple of months. So please do have a look at SMSF School and sign up for the ones which you are interested in. Thank you,
Hmm.
everyone. I will
Thank
now
you.
be ending the webinar for everyone.